this video, I want to go over on how you guys can calculate the profit and the loss for your option contract. So if you ever bought a call or a put and you're wondering how much you can potentially make or how much you can potentially lose, this is the video for you, and it's going to be a very simple guide that we will be going over on a nice simple website, and it is very easy to do. I know Robinhood has a feature, but it only gives you the profit at the expiration, and I know Thinkorswim also has a feature, but it is really not the best feature. And in this video I want to go in very in depth, and it'll look something like this, where you can see the price of the stock and how much you can potentially make percentage wise as well as dollar wise, and then how much you can potentially lose, and then I want to base it off your chart. So let's get started. Make sure to follow me on Twitter for some nice charts, and also make sure to subscribe with notifications on this YouTube channel. So let's get started. The first thing that you have to do is do your technical analysis and know your stop loss and know your price target and know your entry. So for example, I'll give you guys an example of this play on Domino's. So my stop loss or my price target is going to be this level of resistance that I am looking at. Around this target area, around this gap area, and this is going to be my stop loss, which is this support down below at red. So this is going to be my stop loss area, and what I want to do is I want to go to options profit calculator, and I want to make and see the profit of a potential contract that I am going to get. So once you have your price target, once you have the stop loss, keep in mind of those numbers because it is going to be very important. Now the first thing that I'm going to do is, let's just say I want to do a day trade. Okay, I want to do a day trade on Domino's, and the first thing that I actually do is, again, I go to this website called optionsprofitcalculator.com. I'll leave it in the description, and make sure you pin this website, but click the long call or the long put. I'll give you guys an example of a put also, but for example, you want to grab a call, and then once you have this symbol over here where it says simple, type in the ticker symbol. To get the ticker symbol, it could be the top left of TradingView, or if you're on any broker, you should be able to see the ticker symbol. Now once you click that, it's going to get the current price. Keep in mind that it does have a 15-minute delay, so it doesn't have real-time prices for the options and the stock prices. Click select option and make sure that you are clicking buy because you're just buying a contract, and all the way at the top you can see the expiration. So the first thing that I want to click is the expiration. So for example, I'm looking at this trade and I'm thinking to swing this for multiple days or a week or 2 weeks. So I'm probably going to grab 2 weeks out. So I'm going to take a look at here, and let's just say that I want March 31st for my expiration date, because that is what I'm feeling comfortable. I feel like that is enough time for Domino's to kind of break out. So that is going to be my example. Okay, this is just an example, and then I look at the strikes. So these are the strikes, whichever contract that you bought. So for example, I bought a very out of the money $320 expiration. What price you bought it at, so this is very important. Type in the price that you bought it at and how many that you bought, and then you can click calculate. And there are many charts that you can use. So there is kind of like this green and red, which is my favorite one, and there's also a very complicated chart which you can also do, and then there's also the chart values where you can see just the dollar amount on here. So you can see these numbers over here, these are dollar amounts, and then you can also click kind of like percent maximum risk. So where it says 100, that is minus 100%. On the chart it is all percent, so you can decide whatever you want. I like to take a look at the percent to see the percentage and to see that probability. So when I'm taking a look at this contract, I can kind of see theta. So every day you're going to lose a contract if it just trades sideways. So over here on the y-axis, so this is the y-axis with all of these numbers, you can see that this is the price for the Domino's stock, and then the x-axis is the theta or the date. So March 31st, March 16th to March 31st, that is the x-axis. So as more days go by, you'll lose more on the contract if the stock is just trading sideways. So when you're taking a look at expiration, you really understand the risk and what you are getting yourself into. And this is very, very important, because this might not be a good contract. I might not feel confident in this contract, so I can go over here and I could grab a more in the money or at the money contract. So I just got a more at the money contract, and as you can see, there definitely is less risk to this contract that I just picked, but the theta is also a lot less, and I'm losing a lot less, but the risk to reward is kind of different. You're losing less, but you're also making less. So this is a really nice way to see how much you're going to make and how much you're going to lose. And especially if you're taking a look at your chart, it is very, very important to take a look at the chart and to understand, okay, my stop loss is at $300. And when I took a look at the contract, when it hits $300, my contract is going to be a lot lower. And if I go over here, I can kind of set the prices. So I could see that, okay, at $300, my contract is going to be down around 80%. So I'm losing, I'm risking like 80% to make, 40% or whatever, depending upon your price target. So this is a really, really nice way. I'll give you guys a quick example on a put, so you guys can go back to the main website and click a long put. So you are grabbing just a regular put, and you could click DPZ or whatever stock that you are looking at, and then you could click the select option once it finishes loading. And once it finishes loading, again, the first thing you do is the expiration, what expiration that you are looking at, and then the contract for the puts. Now make sure to take a look at the right when you are grabbing a put. You're gonna have to used to this system. You have bid, mid, ask, the strike. Puts are on the right and calls are on the left, and keep in mind that it is 15 minutes delayed. So for example, I want to grab like a 310 put. I could calculate this, and you can now see that it is a reverse. So you had the x-axis and then the y-axis, and now you're making money when the stock goes down, and you can see the profit and all of that, which is really, really nice and really, really cool. Now I quickly want to go over an example, a alert that I made on Twitter. So I did a alert, buy to open, DBZ 320 call, and tomorrow expiration, and I said this was a very, very high risk. Now if someone has no idea on how options work, they might have no idea. So in this tutorial, I want to go over here and how you guys can actually use that and understand the risk factors for this contract that I got, because again, this is a very, very risky contract. So I can go back here and I could click a long call. I'll type the ticker symbol again. I'll click select option, and I'll see the expiration that I have. So I have a 3/17 expiration. So this is literally a tomorrow expiration, or now today when the market opens. And then I can take a look at the strike, which is a 320 strike. So this is going to be a 320 strike, and I bought it in at $50 per contract. So this is going to be my contract. I bought it in for 50, and it is currently at 50. And how many contracts you bought. So I'm just going to only do one right now. Then you can do continue, and boom, here it is. So what I could see is right at open, I'm already going to lose 94%. Okay, I'm going to literally lose my whole contract right at market open. Okay, so if Domino's doesn't gap up, I'm just going to straight up lose the whole contract. And for me to be break even at market open, Domino's needs to be at $318. So Domino's needs to be right around this level of resistance for me to be at that level. But the good side is that I am making a lot more. So let's see, a $322 move, which is right around like 2.6%, is going to be a 400% gain. And this is very important. And whenever I'm, sending a buy and sell alert, again, this was a very risky alert. That is very important to understand, and you have to understand the intention of the play. So the intention of this play was to play a market open pump. So a pump right at market open. That was the intention. The intention that we are going to break this level of resistance right at market open. Let's see if that happens, but that was the intention. And that is why it is very important to really understand on how to calculate your profit. And I should have made this video a lot sooner, but that is a basic overview on how you guys can use. And if you're trading and if you're watching my videos, mix these two together. Okay, if you're looking to enter a contract, always take a look at the profit calculator. And I'm not a fan of options because of theta, IV, and a lot of these other factors, but that is really the main way to get leverage off of if you're day trading or swing trading, because you can't just do shares. So that is it. Hope you guys enjoyed this video, and see you guys later. Bye bye.